Traders, how you doing? Tom with Tom Miller Trading. Welcome back. It's been quite some time. I had some vacation, a couple of them actually. Daughter's birthday. Been traveling a little bit, and then my computer died, so I had to get some brand new trading computer or laptop trading computer. I actually have a desktop as well where I do most of my day trading on. But then when I'm traveling, I've got this high tech gaming laptop that I'm using for trading. So anyways, that's what I'm coming at you from right now, my brand new laptop. Had to get the new capture software, so here we are, and welcome back, and I hope you've been doing well. So as per typical, you can see here up here in the screen, we've got the daily chart to the left, the weekly to the right, and then at the bottom we got the 60 and 15-minute charts. And you'll see that we continue to move higher here on the SPYs. Now we've had a couple of more knee jerks to the downside here. You'll see that in the grand scheme of the weekly chart, up here on the upper right, we had bigger scares here in September and October of last year where we came down more significantly. I guess this last move here wasn't too bad, but notice we're holding above the 20-period moving average here on the weekly chart. Now you can see some compression going on here between the 20 and the 40 on the daily chart, indicating a slowing of momentum. And considering how far this has come, I would not be surprised, like I'd been talking about in my last video, that we would get more of a correction like these here. And we basically, from top to bottom, did get close to that, right? Pretty much, in the ballpark of the same move here and here. And we've come right back up, and now we're hovering near the highs. Volume's picking up a little bit, but things look overall still bullish in general. Obviously with more caution, and obviously trying to make sure that whenever your stops get hit, you take those stops and you don't get stubborn and just hold on to positions. A number of major leaders have been crushed actually as of late, and we'll talk about a few of those. I'll show you a couple of those, as well as some of the stuff I'm looking at here and trading going forward this week. Now you notice here I've got the Nasdaq Qqq Etf up, and you'll notice that the correction here on the weekly chart is much more significant than the one the SPY went through, and you can see it's a lot more rivaling these two. In fact, it's probably a little bit larger than this pullback here, as well as this pullback here, probably about the same, if not slightly larger. So we've dove below the 20 period with more significance than we've had ever since this rally started back in March, April of last year. And so again, momentum slowing. You've got a crossover the moving averages here on the daily chart, indicating a slowing of momentum. Now again, we've had a couple of corrections like this, and we've been able to continue to go higher. We can still go higher, although as we get so long on the tooth here, about a year now of uptrend here, I do not see it as a remote possibility that we could go lower. In fact, I would be prepared for another retest of these bottoming tails here at around the $300 mark for the QQQ. There's definitely some more weakness. Now there's speculation that it has to do with yields. All that speculation is buyers and sellers. No one knows for sure why people are doing things, and you don't need to know. What you need to do is follow the charts, and you can see where the big money is flowing and where the trend is, and you just try to catch those tasty waves on the trend. That's all you do. And the trends will change. So in those dynamic inflection points, you've got to be able to get both ways, go more into cash, start delving into the opposite side of the trade. So that would be more on the short side, or stay out, or go long on ETFs or vehicles that do well in a short or a downward market environment, okay? Like, for example, the VXX, okay? So there, you'll see here that we've really got more of a correction here in the Qs than we do in the SPYs. And if we look at the VIX, it's been down. Remember, I was in it long and I got stopped out, tried it again, got stopped out. And right now, like I said, when it first started, when it broke underneath this 16 range actually, I talked about how it could go down to 12, 11, 12, and sure, here we are at 11, 12. I'm not buying it yet. There's no capitulation. There's no massive volume. There's no panic. So just continue to watch this here, not trading it, maybe day trading it from time to time, but that's about it. Not holding this overnight at this point on the VIX. All right, a couple of top ideas I want to share with you. Vuzi, been talking about this for a long time. Got in this way back in this area here, been riding it up. Took profits. If you were following me on Twitter, I talked about when it hit 28, 29 here, it was time to take some profits. So I took some off the table. bought those shares back as it pulled back here in this mid-low 20s area, and again added to my position even again today when it gapped down to under 20. Bought some more, and it's really uptrending. I mean, if you want to follow the trend's up, right? Now, is it herky-jerky? Yeah. Are these massive percentage moves it puts in? Yeah. So again, don't allocate 50% of your portfolio into this stock. Share size appropriately or position size appropriately. But right now, this thing looks like it's going to go back up higher. And as soon as it gets back up to 28, 29, 30, guess what I'm going to do? All those shares I just added here, I got a core position I've been riding for a long time, but all those shares I added here, I'll probably sell at least half of those into the profit-taking area. But chances are, if we're in an uptrend, we'll go past. So see how we broke from moving from 26 to 30 and change? Expect the same percentage type move, so maybe 30 to 34, 35 on this next move up if it can get going. Now, again, I'm just reading the charts. That does not mean this can't open up tomorrow at $1 a share and crush everyone who's in it long. Anything can happen, okay? But right now the trend says up. Right now the extrapolation tells me we're going to run that to that area at some point, and I think in the long run this stock will go higher. But again, if you look at the weekly chart, it's pretty extended, right? These are massive weekly candles that are getting put in, so it's not for the faint of heart. People that you're counting your total investment money every day, you're gonna have a heart attack if you keep looking at your totals from day to day. You just got to know with fortitude where your target is, when you're going to get in, and when you're going to get out. Okay, when are you going to take your stops? Now, this thing starts to collapse below the 40-period moving average here, $18.50, say, in that area, and comes down with some force. I'm going to liquidate some of my position. I'm not going to hold all of it. Even though I've been adding this area, I'm going to take that and take a loss on that position, but I'm still net positive from the amounts I bought back in here, sold into this high, bought back here, sold into this high, bought back in this area, bought back more here, sold into this high, bought back more here. Doesn't mean it's going to go back up. If it goes back down, you got to get out. Okay, so have a plan, know what you're doing. Don't get silly and not follow your trading plan. All right, a few stocks to consider long. Simple here. I bought this one when it came down here, this 28 area. You'll see the support to the left. You'll see the uptrend on the daily chart and the daily chart and the weekly chart. It's a little bit of a pullback. It's actually a pretty good pullback here. It's finding support in this area. If this market moves higher, I like the simple. I'm already buying into this, nibbling into this position, looking to buy more. SMPL. XEN is another strong one. I think I tweeted about this as well. Look, it's pulled back on the daily right to support. Pulled back on the weekly right to support. Rising moving average, rising moving average, rising moving average. This looks like a good stock to be buying long. If it goes above 18, I'll probably add to my position. Okay. Again, nibbled into the 17 area right now, and I'm not buying full lots either. I'm nibbling. Okay. When the market's looking kind of on shaky legs, I'm not buying giant, my full size. I'm nibbling in, buying maybe a quarter, a half a position, then buying the other half once I get confirmation, because I'm buying support levels. Technically, we don't have a setup here. You've got to have a breach of the high of the previous completed candle for it really to hit. And so I'm kind of front running. So when I front run, I always front run by nibbling. I don't front run by buying full positions. Hope that makes sense. Comment on the video, ask me a question. I can answer it for you if you are confused by what I just said. All right, Boeing here. I'm going to talk about this both as a swing trade and as a day trade. Now, I don't talk about day trading as much in these videos because they're more, day trading is more time sensitive, where you got to be in it every morning, and things can change quickly. But I just want to give you kind of some insight into what I look for with regards to day trading, because this is a perfect example of it. First off, on the swing trading side, Boeing, as mentioned previously, it was a good buy here around $200 a share. I'm swing long in this, been riding it up, and this pullback here, I was not able to add. I didn't snag it on this day. However, you can see this daily chart here, this green candle, wide range green candle on higher volume, is very bullish here, especially in this 20 period, between the 20 and 40 period moving average. As it gapped down in there in reverse, you can see it here on the 60-minute chart really clearly, where it gapped down, tried to go over, did one last drain, and then exploded back up, went up, made a high, made a tornadic formation, taking out a high and then a low, and then it's come up and it's been basing. So swing long, anything here where, in this 250 area, I think you can nibble. If it breaks out above 255, you can add to the position, but you are up 3 days. off this green candle. Any sort of move back down into this area in the 240 range, 240, 245, even if you get down to the high 230s, is viable, and I may nibble and add to my position in that area because I think this support will hold. Now your stop is going to be right under this candle, which is about $231 a share. Is going to be your stop if you enter it in this area up here. Okay, but you've got support. It may come down and take it out. You can kind of watch and see how it behaves. If it comes back down there, maybe actually more of a buying opportunity than a selling opportunity, depending on how it behaves once and if it gets down there. So watch it closely. But those are the price points. About 230 on the stop side, but 230 is also an add for a longer term type situation, especially if it comes down to say it goes down to 230, 229, 228, kisses it and boom, reverses like this. That's just an opportunity to get back on. But right now, swing trade, anything in this area you can nibble, and a break above 255 you can add. Now, day trading wise, you'll see here what happened was we had this reversal, gap down, hardcore. Look at this volume pop here, big volume up, and we've come up here to this 255 area, and we've been digesting the move, letting the moving average catch up. All right, moving average catching up here. It's getting set up for an explosive move. If we get market support, the market is strong. If it breaks past 255, the next target, 265, these previous highs here. All right, so what would your stop be? Well, you can use a stop right under 250. All right, or under these candles here, 240 in the high 240s. However you want to trade it on the 60-minute chart. If you're trading this for a day or 2 days or a 3-day type of move where you're trying to clip $5 to $10 off this thing on the top side, if and when it goes higher, and you'll see that the weekly chart corresponds to that too, right? We're making higher highs, higher lows. We're uptrending, curled over moving averages, 20s over the 40. You got nice big red candles down with a big bottoming tail on volume, popping right back up, right? If it comes back up here, you get slingshotted, and I think this 200 period moving average of 288 is really your next uptrend target. Now that we're in this trend that's establishing itself to the upside, that's my next target, and that's more of a subjective target because you don't have a lot of objective resistance here to the left. You can really go to this topping tail on the 300. Let me see here if I can just draw this out a little bit here and just see what's going on. There we go. From where it fell apart, okay. But there's not a whole lot of resistance here. Technically, this could run up to this cluster of resistance up here around 320. Okay, so just some numbers there on Boeing. My approach on the daily and swing side, and again, I'm already swing long, but I'm always looking to add in my position if this trend's going to continue. So I'm looking to add over 255, or if it say the market, we have a down day in the market tomorrow or the next day, and this thing comes back down the high 240s, I'll nibble a little bit more there. Again, not full positions, okay, nibbling. So far, this thing's a rock, man. Check out this one, Criteo. Now, I've been nibbling into it here in the 31, 32 area as it's been in this area here. Now, notice it's making higher lows. You can see a giant flag forming here on the weekly. Now, keep in mind what the market has done over the last few weeks and what in the daily chart anyway, this is the Nasdaq, and you'll see here this thing has been holding up like a champ. So a break above this 35 area, and again, I'm adding to my nibbles that I've already been doing on this thing for the long side, but this thing looks really good to the top side. This is a big flag, and you've got plenty of room to move higher if and when it can get going. But it's a nice, strong move up, and a lot of times these flags will continue when they're moving off such a flagpole such as this one, high volume and an aggressive move like that. And it's just digesting the moves, and then you get a nice correction in the market, and this thing doesn't correct. That's relative strength, okay? Put it on your watch list for sure. MADX is another one. Nice pullback to the rising moving average on the weekly. Daily, you can see the pullback to the support area here. You can look to nibble. Now again, no real, well, I mean, technically it hit here above this green candle, but you can look to buy it if it breaks above these candles here and your stop's below the low. Okay, buy above this candle, stop below the low. MADX, put it on watch. Zillow is another one. It's pulled back nicely into this this 20 to 40 period moving average area. First time it's done that in quite some time. See, ever since it broke out. So this first time it comes back, it's a pretty big move. I mean, figure 200 has gone down about $100 a share, almost 40, I say 40 to 50%, right, of its original price. It is looking like a head and shoulders here on the daily chart, and basically it's at this break point. So if it can hold this area, I think it goes higher, but you keep it on a tight leash. So if you look to get in on this thing, maybe at 128, your stop's at 117. And if it hits it, just get out, because it could signify, especially if the market rolls over, this could continue to roll down to the $80 area. Okay? So Zillow is another one to definitely consider on the long side. Pfizer's another one. Um, it's up 4 or 5 weeks in a row here. Had a nice correction to support. It's curling up here on the daily chart. It's trying to move. It pulled back a little bit today, but watch and see if it can hold this $36 breakout area. That's your key. If you can hold that area and not go down lower, especially if it's showing relative strength in the market, I think this thing can go higher. So keep an eye on Pfizer as well. All right, just a couple more here. Vail. Another big kind of, you can see this flag setting up on the weekly chart, hitting the rising moving average. Your buy setup is right above that $17.10 mark, right above that candle there. Your stop's underneath the 16. So you got about $1 stop, and you're looking for a continuation move above. VALE, definitely worth watching on the long side for sure. Check out Amcor. It's another one that's holding up really well. Look at this flag forming. Okay, it's whipping around here on the daily chart, but it's holding up, making a higher low now. Trying to go higher. Watch this for consideration breakout over the flag. Stop below the low of the flag, buy above the high. This Amcor definitely looks good and interesting to the long side. All right, last but not least, one of the most loved and hated stocks out there, Tesla. Notice, again, epic run. As pretty much you'd have to be living under a rock to not know that it's been, one of the top performers over the last couple of years. Big correction, though, as I had suggested it would look like it was going to do back in this area here, back in February. It's come down quite a bit. Now it's come back into this zone here between the 20 period, 40 period moving average for the first time on the weekly chart ever since the move since last March, right? Daily chart has curled over, but it's trying to make a higher low. It had a nice aggressive, look at this aggressive day it had here today. I think it's time to nibble along on this thing. Okay, now where's your stop? Well, your hard stop's going to be under this tail, 550, 540-ish. If you want to be more conservative and keep it tighter, although you have the higher chance of getting stopped out, you put it under this candle here around the 590 range, I think. Let me see what the low. 591 was the low today. Okay, so watch this closely, see how it behaves, but it looks like it's trying to make a higher low. Anything over the 650 area, if it breaks out above these 3 candles here, and the market supports it. The market supports it, and it looks like it wants to make another run. It'll go. If the market's really starting to roll over, and a lot of peers start to roll over, this will be a failed situation, I think, and it'll go back down. And then you can look to get short. Okay, if you can get short if you're able to get short, this could be a prime short opportunity, as well as some of the other ones I'm mentioning, if things start to roll over, because failed expectations on things that are in uptrends can really get crushed to the downside, and you want to take advantage of those opportunities. Again, we're just playing the market. We're just trying to see the flow of the river and jump in and ride the flow. No biases toward one way or the other. Just saying which way is it flowing, I'm going to follow it. I'm not going to try to force it to go my way. I'm going to just follow the flow. It makes life so much easier. You're using power, whereas you're trying to if you're trying to force the market to go someplace, you're going to lose. You're going to end up losing. Okay. Use the power of the market on your side. Find out where the power is. Identify where the power is, and then just ride with that power. Okay. Long enough video for this hiatus I've had. I'm just glad to be back. Hope you guys are doing well. Comment on the video. Hit me up. I get notifications. I can respond to you if you have any questions about anything that's going on here. So look forward to talking to you in the next video. Trade well. Follow your plan. And we'll see you in the next one.